for me, entrepreneurship has always been the way.
Investing is important because it's the only way you are going to be able to get rich and wealthy for your family. We can close the wealth gap by working together.
Market Monday is the biggest investment show ever.
My life has literally changed since watching EYL.
When you can make people money and you can add value, they're going to be forever indebted to you.
And I promise you this year, I'm going to make y'all even more money.
Disclaimer, do your own research. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Let's build our knowledge, our community, and our brokerage accounts. Love is love.
Love is love.
Love is love. Happy Monday.
How's everybody feeling? I'm happy that everybody's here. You're here with the same intent that you come every week with, is to learn, to grow, and to build, man. We have out here. Ian, how you feeling, my boy?
Amazing. Glad to be back in Houston. Happy Monday. Shout out to all the earners. Shout out to all the pandas. Shout out to y'all. Fresh off the plane, right? Shout out to my sister Melissa. I heard the event was amazing. John Hope, T.I. Movie. Yeah.
Shout out to everybody that pulled up on us at Carnegie Hall. It was definitely a dope night. John Hope, like you said, lit the stage up. Rachel Oden, one of the most powerful women in finance, lit the stage up. Alicia Little was on stage as well. Rakim was there. Not Rakim. Big Daddy Kane tore the stage up.
Yep.
Ghostface. It was dope. It was dope. Shadi, how you feeling?
Feel good. Shout out to everybody out there that's tapped in, that's tuned in. Happy Father's Day to everybody, and belated Father's Day to all the fathers out there. Yes, sir. It's gonna be a great episode, man. We got a lot to talk about. We got a really, 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 really important guest that's coming on later in the show.
Yes.
So shout out to Morocco. Shout out to the MBPA. Shout out to, all of the athletes that we got a chance to chop it up with. Shout out to everybody, all the athletes that was saying that they was tapped into Market Mondays.
Mm-hmm.
Quite a few of them. Quite a few of the players were saying that that they was tapped into Market Mondays. Shout out to Colin Saxton. Shout out to Jalen Brunson. Shout out to
Jalen Brown.
Shout out to
Brown.
man.
My dog
Shout out to
Taco
JB
Fall.
too,
Yeah. Gary Harris said,
Taco
"What's
Fall,
up, Ian?" Gary Harris definitely said, "What's up?" He told me to let you know that he's been watching for a while. Miles Turner was out there with us. We just had
Rui.
Yeah, Rui Achimura was out there with us. It was a dope group of athletes. But the consensus, which is really interesting, was like they had come to see us. Shout out to my man Ryan out there as well. They had come because they heard that we were going to be there, and they just wanted to get in front of us to figure out, bring about knowledge, which is dope, man. So, we had a presentation, but we also had time to spend with them and like talk some game and let them know how we're looking at finances and how they could also look at their finances. And after we left, they were like, "Nah, we need another hour or two of them guys." It was a dope experience, man.
Shout out to the brother T-Day for putting it together. Greatly appreciated.
Yes, sir.
But, shout out to Morocco, man. And speaking of Morocco, this week, Thursday, Wednesday, we got Blackout 9 o'clock. We got a special guest. We got Ray Daniels.
Hey.
So, we're gonna have an interesting
Atlanta icon, or is he?
or is
Ray,
it
I
you?
got you back.
Maybe he can update us on what's happening in the Bronx, right?
Ray Daniels will be in the building on 9 o'clock Eastern Standard Time on Blackout. Thursday, 12 o'clock Eastern Standard Time. Like I said, we just came from Morocco. So in theme with that, we got the brother French Montana.
Another icon living.
That's
on a low though.
Another in a different league, 2 different leagues, 3 different leagues.
Maybe a legend in 2 games, right?
for sure.
Shout out to the brother French, man. That's been a long time coming. Got a really, really interesting conversation. Very interesting, smart guy. Man, he says some things on there that's going to ruffle some feathers.
Perhaps.
Oh, wow.
He said a few things on there. So shout out to Frenchie. We got French Montana, 12 o'clock on Thursday. EYL University, I'm teaching my class tomorrow at 7 o'clock. And then Thursday at 7 o'clock, Troy
I'm back.
is teaching the options class.
I'm back.
Thursday at 7 o'clock. So make sure you set your alarm, set your reminders.
Yeah.
Get in there, EYLUniversity.com. Check the app.
Yeah, be there early. Be there early. If you've been here for a few months, you've seen what missing a class can cost you. And so let's not continue that trend. Let's be there early. Let's come, open-minded, willing to learn, and willing to be part of the community, man. It's going to be a special one. I got something special planned for y'all. So Thursday at 7, make sure y'all pull up.
Ian, any announcements?
Yeah, staying in tune with the education thing. Stock Club call will be this Sunday at 4 p.m. Central. Me and my guy, Bilal Little. We have a lot to talk about with the markets. We made history on ETF Central, so we're going to do it again in Stock Club. Once again, like Troy said, be there early because, spaces get locked out real fast inside 2 or 3 minutes. A lot to go over. My SpaceX load the boat price will be given. We'll talk about SpaceX later, but my load the boat price for SpaceX will be given in my projections on the market. Probably be on for 2 or 3 hours. Shout out, going to the athlete thing, shout out to our brother Fred Taylor. Ran into him at the airport yesterday. Had a good conversation. Shout out to him, Ryan, Pivot, whole squad. If I made you money, please put yes in chat, and let's have an amazing episode. And I'll see you July 2nd at Dave and Shan's podcast summit, even though I want to be at La Marina live.
That's the third. That's the third.
They shut it down.
Oh, third.
Oh.
What?
Yeah.
Yeah, they shut it down.
Yeah.
Why?
Talk about it on Blackout. They started the promo. Shout out to my man Jay Crew Love. He told me, he said, "Yo, that ain't gonna happen." Once they said La Marina is back and Fabulous is performing, it's too much.
Damn.
Nah, bro.
The idea was great.
The parade and this.
The idea was fun.
J. Crew, you hey, hurry up. Hurry.
Yeah, but I got to give a special happy birthday. My daughter is turning 15 years old, y'all.
What?
15? Yeah, I know, man. She's turning 15 this Saturday. Happy birthday, Jordan. Daddy,
happy birthday.
Yeah, man. It's an interesting time to be a girl dad. But she did give me a big hug yesterday as she told me her things that she would like to have for her birthday. So we're gonna make sure all those things come true. Because you do whatever you can for your girls, man.
Which option you gonna liquidate to pay for the G-Wagon?
I got a couple more years before that, man. I think we're gonna learn how to drive first.
Okay.
And then I told her, look, we're gonna start out with a Toyota Camry, and she looked at me and laughed. And I was like, well, that was my first car. And she was like,
for sure.
Well,
yes.
Dad. Like, so I'm like, what's the car you're thinking? She's like a BMW at least. I'm like, damn.
The expectations of kids these days, bro.
At least. Yeah.
Happy birthday, Jordan. For sure. Enjoy it.
Yeah, we got to talk about that on Blackout, how to set expectations for your kids. Because Andy used to be real conservative, but now he done got around his teammates. This boy said, hey, summer dad, why don't you just get a Ferrari? For what? For what?
A Ferrari.
For what?
A Ferrari play.
I feel better now.
My boy, y'all lost. What you mean? Shout out to Steam Ahead. Amazing tournament this weekend. I'm so proud of y'all. Shout out to 16U. I'm proud of you, my boy. Keep working.
Let's get it. What's the investment fact of the week?
I really think the movie The Big Short psychologically did more harm to retail investors long term than the good that it provided in terms of inspiration. I love Michael Burry. I love Michael Lewis, who wrote the book. But in the conversations that I had this weekend, shout out to everyone I saw in San Antonio, everyone was so concerned on a crash. And the interesting part is we haven't seen, and we'll talk about SpaceX later, we'll talk about Google, we'll talk about Microsoft, but everyone is so focused on a crash. Please put this in chat. The money is not made in a crash. The money is made in holding for long term. And Rashad, it was something we were talking about like via text yesterday. It's like, okay, so let's say if the Fed hikes up the rates 3 times this year, it could lead to a 20% drop. that will be an immense opportunity going out to 2030 if you buy the right asset. So my fact of the week is there is no benefit to being a pessimist or the bear when all the money is made being a bull. Everyone I talk to, what you think is going to happen in 2027? I've stated my thesis on 2027. The other part that isn't echoed or talked about enough, I am waiting to buy every asset that I love and all the IP I can as quickly as possible to hold for a long period of time. So I love the movie The Big Short. And and to be very honest, it was an amazing feat for Michael Burry to get 500%. But I think we've shown on the show the 500% is probably a median baseline if you hold for a 3 or 4 year period long term. And if you're trading futures and options, you can pull that off in 2 to 3 months. Be a bull and an optimist and not a bear and a pessimist.
I like the approach, Ian. I'll be honest with you. The idea of the harm that could have caused and the pessimistic views that it could have caused. I think my fact will be in line with that. And I think, we always talk about time as being one of the greatest assets that you have, especially in derivatives, futures, and options. I think I'm going to add to it. I think my fact would be that patience is one of the greatest hedges, right? Like, yes, have the time, but be patient with it. What I've been seeing is that people have time and they're still like unclear of what to do in the intermediate, right? So like there's calls that are out to 2028 and something might be down 11% and it's like, what do I do?
Is it time to sell?
Right? So yeah, I mean, you would think that because you had the time, which was the asset we spoke about, and then the patience is the part that was missing out of that equation. And so, yeah, be patient with the positions that you're in because, like we said, a 5 to 10 year outlook will change how that portfolio is going to look long term. And so if we can add that piece, like the patience, and I always start with the PAY because patience pays and times. Those two hedges, right? Like that is the edge that gets your portfolio to a point where you're starting to think, okay, now I can see this is how wealth accumulation is built.
Yeah, time is the greatest indicator of all. I know, and I hate that a lot of it has turned into trading talk, but even in your trades, you need time for your trades to work out. There's no worse feeling than if you're trading off, let's say, a minute chart, 2 minute chart, which is a mistake for 99% of traders. And if you would have had maybe 15 or 20 more minutes for the trade to play out, you would have been in profit. So make sure you have a long enough time horizon for things to work out in your favor.
Yeah, I've seen a couple of those over the past months where we're talking about late March when we're in the midst of the war, people buying calls out to July, June, sticking to the plan like, hey, I got 80%, selling at 80%, and then watching a company like Micron run up another 400%. You had the time in your favor, right? Obviously, probably not as much as you may have wanted, but you did still have about two or three more months. But the idea of what do I do in that intermediate? Will I be patient, right? I got the 80%. What if it pulls back down to 30%? Like experience again comes into that, but just having that patience. What do we do next time? Do we go out further? Do we go out longer? Do we put the expiration date out as further as it can go? Do we keep the strike price close? You start to learn some of those things inside of the experience, but having that patience, man, like that changes things.
Yes, sir. Okay, let's get to the next topic. We are live, ladies and gentlemen.
Yeah.
Yes, we're live.
You're right. Troy still don't got it. You're right.
Let's go to the trading tip of the week.
Most traders will be better off trading off the 1 hour or the 2 hour and having less trades per month, but having entries at a better entry price to avoid being stop hunted. I know it's a lot more fun to probably trade off of a 2 minute, 60-second chart. Some people are trading, I've even seen people trade 10-second charts. It's exciting and exhilarating. But less is more. And the reason why I bring this up, I've had a conversation with somebody yesterday who was on the verge of taking their life because of a loss. And when you get to that point, That's not the time for counseling for what went wrong and what could have been done better, and et cetera. But whenever I've had these conversations, it was because the leverage was too big, and then the time horizon that you're trading off of is too small. Now, when the market is closed, everyone says, well, yeah, I'm gonna look at the week, the day, the hour. Then I'm gonna go to the 10-second chart and make my entry. If you've ever traded off of micro time frames, it's moving so fast, all you can do is put your eye on the smaller time frame chart. So you'll be much better trading off the 1 hour or the 2 hour, or in your swings trading off the 8 hour and the 12 hour, and have a bigger macro view, opposed to constantly trading on a smaller time frame, trying to get a better entry, and you're not seeing the big macro picture of what's going on in your trades.
That's 10 seconds is. I guess you got to know what kind of investor you are.
Even with that, that's one of the biggest lies that ever get told in investing and trading too. You got to know your personality. Your personality does not give a damn. Like, it doesn't matter when they get to sweeping liquidity.
Yeah,
you got to know the real buyers. That sounds good. People tell you that because they don't want to tell you the answer of when to buy. It's like when Buffett be like, yo, just buy the S&P 500. I know that, dipshit, respectfully. But tell me the real thing to buy that you're going to put 35% of your holdings into. The personality does not matter when liquidity sweeps and stop hunting happen.
That is true. I'm just speaking from a just personal standpoint. Like, the idea of watching something on a 10-second chart, trying to invest something on a daily, you have people who will scalp, and that, from that standpoint, like, know what you want to do, not the type, but just know what you want to do, right? Because that is extremely volatile. It would cause me anxiety, right? If
and the algos don't even do it. Like, it's a great.
Yeah. And if you're trading 10 seconds, right? Think about what the algorithmic traders are doing. Like, they're doing less than a second. They're doing a tenth of a fraction of a second. So you're actually still behind by a large gap in terms of time.
And even when the algos are trading those fraction of a second trades, they're still looking at price disparities on higher time frames.
Yeah.
Be careful. Not saying that it can't be done, but for 99.8% of people, it's not going to happen.
My trading tip is this, and me and Shadi had this conversation earlier. You know, nobody spoke about this, but quadruple witching actually happened last week. Right? And so that's when option contracts expire in a large amount. So when the year starts, it's usually 4 dates that come out. It's usually a January date, there's a March, there's a June, September, and then usually toward the end, they'll put out the December one. And so it goes in rotation. That would be 5, but like January, it kind of fluctuates. And so why is that important? Because the June options expired, that June 19th date. Obviously, the market was closed, but they expired on June 18th. New contracts start to be created. And so when I'm talking about we're adding to the expiration date, now I'm looking at, okay, if June 26th is off the table, are we now going into Jan 1 or January, whatever date, 2029? I'm looking 2.5 years out. I'm looking for companies that have depreciated in value, that are going to be strong companies. I'll just use an example, Microsoft, right? Trading at below 20 to 30%, strong company, has a strong balance sheet, has cash flow. Can we look to contracts out there? So that would be my trading tip of the week. Once you start to see quadruple witching happen, which is a lot of sell-off, new contracts are created. So let's start looking out to those dates. I'm sure NVIDIA will be out to January 29 at some point in the next 2 weeks. Microsoft, Apple, all the mega cap companies will start expanding out, and then the ETFs will go out as far as well. So if we want to buy time, this is the time to start looking at them early.
Yeah, and switch your futures contracts over too.
Yep.
Yeah, switch your contracts over, please.
Somebody said, what is triple witching?
Quadruple witching?
Quadruple witching.
So that, I'll give you the dates, and then I'll give you the definition. So that's going to happen 4 times a year. It is the 3rd week in the last month of each quarter. So March, the 3rd week of March, 3rd week of June, 3rd week of September, and 3rd week of December, where option contracts and futures contracts, I shouldn't just say options, derivative contracts are originated, and a large amount of them expire. So, for example, if you go out into 2028 right now, there might be just 3 months that are out there if you're looking to buy contracts. Why are we doing that? Because again, time is our most valuable asset. And so if you look and it says January 2028 it might say June 2028, and it might say December 2028. And those are the only 3 expiration dates you can have in that year. As time gets closer, you're going to start to see more. You'll see March, you'll see September, you'll see February, you start to see August. Like if you did that in the year 2026, you'll look every month is there. So witching, right? Large sell-off, large origination. Yeah. So that's why it's important to know those dates, because if we're looking out to buy time, well, here comes the time where new contracts are being originated as a lot of them are being sold off.
If you guys look on Charles Schwab, if you're trading in futures, there's a vertical green line that tells you the expiration, and then on the red line it tells you the date in which it switches. So if you want to see when those expirations are or those witching cycles are, you can do it on Thinkorswim, and they'll be right there in your chart for you.
Hit the like button and share. We will be going over the AI blueprint. We're going to be talking about some very, very, very important topics shortly. So share, hit the like button, tell a friend to tell a friend. Let's talk about June. You talked before about the stock market never peaks in June. So explain that for people that might not have fully understood what you meant by that.
Yeah, so maybe I caused some confusion. So I want to take accountability and say if you got confused on the talking point or the stat, I want to clear it up for you today. So when I said the market never peaks in June, what it means, the high for the year is not made in June. The worst month for the market usually is September. July will present as a buying opportunity. August will probably present during InvestFest as a buying opportunity. But the highs for the year for the S&P and the Dow and the Russell don't happen mid-year. And in terms like on a stat basis, it's one that I like to lean on a lot. So if we have any pullbacks in June or July, I'm usually very happy about them. So some people thought I meant that the high happens in June. That's not what I was inferring, but if that's how it came across because of me, I apologize. But the market never peaks in June. It's usually later in the year, November, when the market does peak. So if I caused some confusion, my apologies. Even though if you listen closely, it shouldn't have caused that, but I apologize from the bottom of my heart.
Appreciate it. Accountability is key.
It's everything. Accountability is key.
The accountability corner.
For sure. Yep.
The pitch competition finalists have been set. We'll announce it later on. Not this show, but like later on, like the coming weeks. But the pitch competition finalists have been set. So those people are locked in. Let's talk. Go ahead.
Before we go, can I talk about really quick about the conversation I had with the gentleman? Some telltale signs in your trading that is about to go wrong. Troy, Rashad, you'll love this. He was doing intraday options on I won't tell his time frame because I don't want his business out there. And he was doing intraday futures contracts at the same time, 60 contracts apiece on both sides. So I said, okay, you have some skill because you have capital to trade these things, but why are you trading both intraday? And I know a lot of times the desire to make the money fast is there, but at least if you're going to do two derivatives, options and futures, if you're going to do intraday futures, do call options to give you 2 years or a year and a half out. Or if you're going to do intraday options, which I don't recommend, at least swing trade the futures so you have 30 days. Don't intraday trade both. And he showed me his account. He showed me his trades. Is a good trader. But please remember this. Being a good trader, you can now outwork bad numbers through technical analysis. My first question was, what's your risk to reward? I'm just trying to take profit once it gets back to the midline after it sweeps low. That's not a mathematical formula. Shawty ain't built no fucking art museum off a non-mathematical formula like that. The thing that I love about like any business, once you get to the mathematical science of it, even if you go on media, watch time, the conversion, everything has a science around numbers. It can't be feel. There's no feel in investing. It's all numbers. So know your risk to reward, know your contract sizing, know if you're risking 1, if you're going to make 5 or 11. But if you're risking 1 to 1 or 1 to 3, you only need 3 bad trades to blow up your account. If it ever gets that bad where you are going to take your life over a trade, call me first. But if you are trading big contract sizes, it's really important to let them contracts run. And don't fake like you going through something just so I can help you out, please. But I'm begging you guys, get your wrist. There's gonna be a lot of that. Yo, my boy, I'm down. Yo, shawty, hey, call your boy Ian. I'm down. So, but if you are trading size, you have to let things be able to work out in your favor, and live to trade another day. Now, when he was hitting, he was hitting. But to lose 400,000 or 500,000 in a day, and it's a bad part. Now you lose a trade. Now you want to work to get it back. It's tough, bro. And biggest violation of all, no stop loss on either. I was in the airport. I was talking to Fred. I said, bro, look at this. He said, why is he trading with no stop? I said, damn, I didn't even know you knew how to trade. He said, bro, I know not have no stop. Are you crazy? No stop loss on the options or the futures. So that's my little quick sidebar lesson. If you guys want to chime in on risk that come with trading.
YOLO.
No. That's tough. It's tough because the 0-day options is just it's tough, man. Like sometimes it's not a technical or fundamental situation, right? There might be something that you don't see, right? Like we saw that happen with Google today. I'm sure we'll talk about it later. But there's some things that are just not technical or fundamental analysis breakdown, right? It's an economic issue. It's a CEO stepping down. It's a CFO leaving.
The parent company.
The parent, right? There's all the parent company, indeed. So these things are not in your control, man. And now I'm hearing rumors now that options trading is now going to be something that is not just between 9:30 and 4 o'clock anymore.
And they took away the pattern day trading rule 2 weeks ago.
Yes, they did. If you saw that disclaimer, yes, they did.
It's like, what?
Yeah. So now imagine, more the amount of liquidity that's going to come into that now that, it's not just 4 o'clock, it's over, or 4:10 from the CBOE. It might, certain equities might be there 24 hours. And so it feels, now I get it. We had this conversation with a few players about gambling and investing, but there are certain features that they're trying to entice that feel like, all right, this is a bit speculative now.
Yeah. Well, okay. We're about to go shortly into the segment. It's on the title as far as like 1,000% rate of returns for stocks, because there's been a few this year. But before that, I want to talk about power of relationships. Once again, I gotta say this every single episode because there's a reason to talk about it every single episode. Man, InvestFest has come together. We've been talking about this for a couple of months now, so I don't really have to talk about it too much. But Serena Williams will be headlining. Steve Harvey, Nick Cannon, T.I. That Ian Dunlap will be in the building. Tashonda Duckett, if you don't know who she is, she's the only Black woman that's a CEO of a Fortune 100 company. We have 3 billionaires: Mike Novogratz, John Morgan. We have Berner. We have Dan Fleischman. We have Sanaya Bovell, one of the highest ranking members when it comes to artificial intelligence. We have so many different people. Black Tie Affair this year. Man, it's just expanding. We're working on something for Thursday night now. It just gets bigger and bigger every single year. So we did something last year, and once again, it's just the power of relationships. We have a lot of good corporate partners, and one of them is Revolt. And we've been working with Revolt for probably 5 years now. And they just been solid all the way through. As far as we had our show Assets Over Liabilities, and then they've supported InvestFest in the past. Last year, Ross Mack's panel with State Farm, they were responsible for that. So a lot of times you see us do things, and it's not just us. Like, we have different relationships that we have, and we do things with different corporate partners. And Revolt definitely been a solid partner for us for years now. So we did something last year with Block, and they saw it, and this has actually been working for a couple of months, but we just finalized it yesterday. So I want to publicly thank Datavio, CEO of Revolt,
Amazing person.
Dion.
Yep.
Yeah, he's running Revolt right now. So,
Mhm.
you know, it's economic challenges out there. So what they wanted to do was they wanted to do a 50% off. Revolt is sponsoring 50% off for 100 ticket holders and 10 small business vendors that want to enter the vendor marketplace.
Oh, wow.
So this is tickets, general admission ticket or VIP ticket, either or, and any booth level. If you're a small business owner and you want to get a booth inside the vendor marketplace, 20,000 people per day to sell your products, services, and get the word out about your business. First come, first serve. All you have to do is go to investfest.com and enter code REVOLT at checkout. Once again, it's for 100 ticket buyers, general admission or VIP, and for 10 small businesses that are looking to get vendor booths, 50% off the price of a vendor booth, 50% off the price of a ticket, general admission or VIP. That's courtesy of Revolt. We want to thank the good folks at Revolt for putting their money where their mouth is. You know, a lot of people talk about Black excellence. A lot of people talk about supporting Black businesses. A lot of people talk about collaboration, but very few people actually, cut a check. Yes, that's a fact. So I want to say shout out to Revolt once again, Dion, Datavio.
Yeah, both great people.
If you think about going to InvestFest, if you think about getting a booth, this is probably a moment that you should probably do it. So 50% off, 100 tickets, 10 vendor booths, first come, first serve. Go to investfest.com, enter code REVOLT at checkout, and you will get 50% off.
Yeah. When we talk about collaboration, this is the highlight of it, right? Like, in Datavio, we've had plenty of conversations. He's always said, number one, I want to support you, brothers, but I also want to be in business with you, brothers. And that's been for 5 years now, man. And so a man of his word, a dude of strong character, and one of the most intelligent guys you're going to meet in terms of business.
For sure.
It's an amazing opportunity, man. Like I said, we already know InvestFest is life-changing, but the amount of people, the networking that you're going to be a part of is life-changing as well. So take advantage of it. Take advantage of it for sure.
Is Datavio speaking at InvestFest?
You never know. Shout out to congratulations.
Congrats.
To him. He's about to have a child. So, he's
I know that. Congrats.
Yeah.
His world is going to change. His world is going to change.
For sure.
So,
I was just going to say, and that's still the family, right? Like, we still rock with everybody over at Revolt, whether it's Datavio, Dion, Michelle, Latra, just all the people that were part of Assets for Liabilities, we still work with. And that's what relationships should be, right? Like, the show's over, we'll never see each other again. No, man, we really liked each other. We like working with each other. How can we continue to do business? How can we create ventures in the future? And that's what we're doing here, man.
Because, and that's important too, even though something is over, doesn't mean a relationship is over. So even though we finished our show with Revolt, we still got a good relationship with them 3 years down the line. And now the next question is, well, why can't they just do 50 tickets and 10 free? Because if you don't pay, you don't pay attention. So you got to have some skin. You got to have some skin in the game. If the ticket's $250 and it's 50% off, $125, that's basically free. But you need like you yourself. This is important lesson. You yourself need to be invested in something, right? So if you're serious about your business, 50% off, then you don't want to do it. If you're serious about your ticket, somebody give you 50% off. Like, when people don't pay, they don't pay attention. Even if it's a small amount, even if it's $100, right? You'd be surprised. Somebody will travel 6 hours because they spent the $100. You give somebody something for free, they'll be right across the street and then just decide that they want to go to lunch.
Good. Yeah, I'm good.
Yeah, I'm good.
Oh, and to everyone I know, unless you're in the inner circle of Red Panda or my blood family, use that link, Revolt, right now at investfest.com to get the tickets that you want from me. I love you so much. Back to you, Troy.
We appreciate y'all kindly.
That's a fact.
For real.
For real.
You got some more tickets. Just like Revolt, Datavio has them.
Yes, I have some more tickets at investfest.com.
Shout out to Datavio. So yeah, August 7th through August 9th in Atlanta, Georgia. Man, this is going to be crazy. Get your hotel. So let's talk about memory stocks. But before we talk about memory, I want to show this video from Apple. Can we show this video from Apple, Wall Street Journal? Sound, please.
No sound.
No sound.
No sound on the video. This is live.
Yeah.
Okay.
Well, I'll give context while that's trying to be loaded. So it's interesting because Apple was in the news last week. Well, it was in the news for the past couple of weeks, right? Like they had their conference and people were kind of underwhelmed by it, which is rightfully so, right? When we talk about innovation and where we're at it, we still don't have the path for artificial intelligence laid out for us. And then last week, what we saw was they had made a partnership with Intel. Why is that important? Well, we know that the government obviously has made it a priority for Intel to be in the business of manufacturing GPUs, CPUs, and TPUs. And so the Apple proposition, when I saw it, this is crazy. The video which we're trying to get work, I sent to Shadi on Thursday.
Yeah.
And he sent it to me today. So I'm like, that sometimes that tells you, number one, I appreciate it because that tells me that he's looking at the memory space the way I'm seeing it, but it also says like we're on the right path because not only are we seeing it, but CEOs like Tim Cook, CEOs like Jensen, I know Sanjay over at Micron is seeing it the same way. And so I sent him a picture of Neo in the Matrix. I like to use Neo in the Matrix when everything starts to become true because you're seeing life differently. And we're starting to see AI differently. We're starting to see the layers. It's not just, hey, it's NVIDIA and good luck with everything else. It's no, this needs to work in order for that to work, in order for this to work. And so the picture's becoming very clear. And that's kind of what the video is. Hopefully we can get to go, Mike.
So
Apple has a problem. It's so bad that Tim Cook is calling it a 100-year flood. The price for tiny but critical components buried inside our electronics is skyrocketing, specifically memory and storage chips. And Tim Cook told me it's going to force Apple to raise prices. I spoke with the outgoing Apple CEO in an exclusive interview about the company's plan to adjust to this new reality. Cook told me that the company's planned price increases are unavoidable, and while Apple has tried to mitigate increased costs, the situation, he said, has become unsustainable. So why is this happening now? Chips have gotten faster and cheaper every couple years, powering a new technology revolution every decade or so. But in the last few months, that magic formula has reversed. That's because the prices for memory and storage chips, which are inside virtually every computing device, have suddenly skyrocketed. Apple's latest warning is remarkable because it's been the biggest buyer of storage since the days of the iPod, and also a giant buyer of memory. But now, there's a new competitor in town, artificial intelligence. AI companies are flooding the memory and storage market with money and securing much of the supply. Suddenly, Apple no longer has the leverage to push the storage and memory makers for the lowest prices. It has to wait in line. What Cook told me on our call is that Apple has already been absorbing higher costs, but now it is swinging over to option 2, price increases. Cook didn't say how much prices will increase, or when, or on what products. But to give you an idea of the scale, research firm Tech Insights says the cost of memory and storage inside last year's iPhone 17 Pro was $50. The cost for the same components in the upcoming iPhone 18 Pro, around $200. Now, the good news for Apple is that it's in a better position than less profitable companies who have little cushion to absorb the higher costs. Other companies are saying this is worse than tariffs, worse than the chip shortage during the pandemic. So this isn't just an Apple story. It's a tax on basically everything with memory and storage chips. And few consumers realize this wave is coming.
So, all right, let's put that in perspective. If
keyword,
if you watch that video and your key takeaway was that Apple is in trouble, or it's not even about Apple.
No.
The video illustrates the need for memory, the supply-demand crisis that has happened, and the price increase for the memory chips specifically, which is why Apple is raising their price. Apple is not really the most important part of that story. It's the memory. So that's why these memory stocks have skyrocketed, right? It just kind of illustrates that puts it in perspective. So when we talk about the memory stocks, and we'll talk about the memory stocks now because that's the title that we're on right now. But when we talk about the memory stocks, we talk about memory ETF. We've been talking about DRAM. So vitally important for you guys to understand that it's not over yet. So like when the guy, so when I brought the Micron, and then, got ridiculed for that.
Give it time.
He didn't understand that it wasn't like Micron was just like some meme stock that just shot up for no reason.
Yeah.
There is a real demand for these memory chips. There's a shortage of them. The price has increased higher. So when you see a company like Apple pretty much saying like, we gotta raise our iPhone because there's no other option. Well, that should tell you the future of the memory sector. It's not over yet, right? So so let's talk about the individual, because I know you was early on talking about these stocks. So explain the memory sector, talk about the individual stocks, because we talk about these stocks and a lot of them have went up over 1,000% this year in the last 12 months. Like even Micron's up 888% in the last 12 months, just the stock, not the option, just the stock. So, and then there's a bunch of other memories that's not directly memory related, but kind of spin-off memories. There's different like subsector memory adjacent. So Ian,
can I have a moment? I'm gonna have like an Ian moment real quick right now. September of 2024, inside of EYLU. This is the first time, probably the second time, I break down this company called Micron. Why do I break it down? Because I'm understanding this AI data centers specifically and the components that are going to be needed inside of it in order for it to function. In June of 2024, this is the first time I actually invest in a company. By December of 24, I'm saying the business model for Micron. Well, why am I saying the business model? Because it changed. And I told you, anytime you look at companies that start changing their business model to gain profit, that's an interesting proposition. What was the business model prior? They were making memory for CPUs. Well, that had been something that was done from a generation past, which is why a company like Apple can dictate, hey, we're not paying that price. Because when you're making it for the CPU and there's no other component that's needed, then that becomes cyclical. And we've been saying all along, this is not a cyclical situation, right? This is something that's going to be here for a while. And so part of that thesis was, okay, well, Micron isn't the only one. Western Digital at the time, this is again, September 2024, Western Digital is prominent. Seagate, ticker STX, prominent. SanDisk is not even a company yet. Think about that, right? September 2020, SanDisk is not even a company. It's still a part of the Western Digital conglomerate. It breaks off in February of 2025. What are we seeing? We're seeing the demand for AI increase the memory demand. Why? Because in order for the heart, right? We did this diagram. The heart of this AI revolution, we can say, is the GPU, and the leader of the GPU is NVIDIA. Now, TPUs have been created, of course. We've seen Google do that, XPUs with Broadcom, we've seen that. But at the heart, those processing units are there. In order for them to function at the highest capability, they need a brain. The brain of the operation is its memory. Now, all memories are not created equal, right? Which is kind of what you were just alluding to, Shadi. We're talking about DRAM, which is the ETF name, right? And we'll get into SK Hynix and Samsung in a bit, but that is what is used for large language models, right? That is what's used for inference, which is in the highest demand. And so we're starting to see those numbers go up. Now, what has happened is that they control the supply-demand equation, right? The supply has increased, right? The supply has increased, the demand has increased. Well, that has switched over the past 8 months. The demand is so high that they are not meeting supply because they've sold out for 2026. Who was sold out? SK Hynix, which is the world leader and just became the largest company in South Korea's history. Samsung, which is number 2. Micron. When we talked about American companies that are going to dominate, why do we say Micron? Because it's the leader of American memory DRAM. Plain and simple. In that time, that sells out, so we have to go to the next venture. Well, if we have DRAM taken care of, look, can we get solid state memory, right? So solid state disk, that's the USB that you used to use, that's the cards that go inside of a lot of your devices. A company like SanDisk spun off from Western Digital. That company has gone up by 4,000%. Not an option. The company has gone up 4,000% since February of 2025. These companies are not going anywhere because the demand for memory will not go anywhere. In fact, when you use your chat GBT, I said this the other day to one of the players. I said, do you use chat GBT? He said, yeah. I said, how often? He said, all day. I said, perfect. You're one person. Think about how many times you prompt and how much memory is needed to keep that prompt in conjunction with what you're trying to ask it. I said, now you're one person. You know how many people OpenAI has on a monthly user base? 1 billion.
Yeah.
They have 1 billion users, and that's just OpenAI. How many does Anthropic have? How many does Gemini have? How many does XAI have? Think about all those people that are prompting at the same time and how much memory is needed. That's just on the large language models. That's not even including the type of money that's going to be spent inside of these data centers. And so when you look at that, I always say the same quote. I text him all the time, we're not done. What's that mean? We're not done, right? Like stay local fine means, look, we're going to be in here. We're going to be precise with when we execute, but this story is far from finished. Why is this story so interesting? Because when I see Intel saying that they're going to make more manufacturing GPUs and TPUs for Apple, I say more chips, more memory, right? So it's no coincidence that when we watch Micron run up today to its all-time high, we watch SanDisk run up to its all-time high. These things are happening because the demand for the key component inside the story is still going to be here. The more AI we have, the more large language models we have, the more agentic, the more robotics we have, they're going to need that brain component. And that's why you're going to continue to see these things run. Now, DRAM is important because it has an ETF where we get access to it. So I know some of these companies have run high. In fact, there might be a split at some point in the near future. So DRAM gives us access to it. 27% of their allocation is Micron. I love that. 26% of it is SK Hynix, a company that we can't trade it because it's in South Korea, but it will IPO in America sometime in the fall. Perfect. Samsung is number 3. And if you look at the allocations, there goes Western Digital, there goes Seagate, there goes SanDisk. These are all prominent stories that I wouldn't say we're in the first inning, but we're definitely not in the ninth. There's so much room to go. And so this is why when you see memory and you keep hearing memory and you don't know why it's moving, this is why it's moving.
And if shout out to Edwin who sent me this. He's remember when there was a memory shortage in 2020? Like this is going to be a multi-decade story. Like it went from Nvidia, AMD, and now it's the trade and investment has kind of evolved. And the great part is when there was a bunch of SPACs and memes floating around, I've always said that great enterprise companies are going to push back and they're going to take the reins, and they actually have done that a ton. And so much so that they've moved Meta out of the top 10 in terms of market cap. So for anyone who thinks that this trade is going to be short-lived or this investment cycle is going to be short-lived, because I know there's a lot of people putting that SOXL chart versus the 1999 chart versus now. I keep saying the difference between the companies then and now is that these companies alone print the GDP of nations. In 1999 and 2000, they did not. They're needed. Has Apple underdelivered on the Siri AI? And yes, but I think the partnership, even though it's a forced and arranged marriage from Trump, I think is going to give them a little bit of a chance in to finally build some AI infrastructure that they need. But for anyone who keep asking, is this going to go away? It's not going away anytime soon. It's not going anywhere anytime soon.
You know what was when we talk about relationships, think about where Apple was in terms of relationships when it came to memory. I mean, dominant, the number one customer. They were TSM,
they were had the most leverage. Yes.
They were TSM's number one customer. They are no longer TSM's number one customer. NVIDIA has now passed them. When you talk about the idea of being the first in line and saying we're not paying to now being maybe fifth in line and saying you're going to pay the price or you won't have it.
Or you won't have access to leverage is gone. And that's a great lesson. You have to make sure you keep pole position when you have the leverage. Apple got so comfortable, and that's why I kept pushing back. Oh, Tim needs to leave. You have a small and finite window to be the king of that market cap, and you missed it. And now Meta slowly, and at least Meta has tried to build out an accurate AI infrastructure and spend for what they need. But even so, they went down to 10th. thank God BYD is not available in the United States of America. We will be having a different conversation about the top 10 market cap there as well, but this memory trade is not going anywhere anytime soon.
Well, let's talk about, staying on the memory. Wednesday is
Big day.
MU Micron reports. So what's been happening, and that's why actually I brought that Micron call last time, because it dropped pretty sharply.
Yep.
So it's been a common theme with a lot of tech stocks lately is that regardless of what they report, they beat earnings, they don't beat earnings, stock drops. So Micron being one of the leaders when it comes to, probably the leader, $1 trillion company when it comes to memory, they report on Wednesday.
Yeah.
So what we looking forward to when Micron reports on Wednesday?
I think people need to anticipate something stupendous. I think
monumental.
It's going to be monumentous in the words of my boy Carlos Miller. It's going to be monumentous. Now, is great enough? I mean, I don't move here. But think about this, right? When we talk about EPS, earnings per share, the expectation. Ian, if I asked you, hey, if a company says they're going to grow by $1.25 in a quarter, you say what?
I am elated.
You're elated, right?
Job well done.
Amazing.
Yes.
Job well.
Spectacular performance. Like, this is MVP Brunson-esque numbers.
Yeah. Yep. The EPS for Micron, when they report on Wednesday, is $21.
Basketball terms, that's like expecting someone to score like 92 points in a game. The expectation is so like, bro, what are we doing?
Let's say that they maybe they missed by like, and it's $20 per share.
Yeah. Yep.
You're talking about a company that a year ago was moving at that pace of $1.47 EPS, $1.70 EPS. Last quarter, it went up to $8 EPS. This quarter, they're expecting 21. And if you look at future guidance for the next 3 quarters, we're at 30.
Yeah, and 30. They're projecting to get to the 40s, but you let SpaceX had that evaluation with that price to sales ratio
off the rip. That's a whole nother.
What? Oh my God.
The idea, and there is some truth to that, right? We watched it have a monumentous quarter, something we had never seen. We came on here and talked about it, and we watched Micron go from like 430 down to like 360, which was an opportunity to say we're going to buy. The story's not over. Like, that's been the common theme. The story remains. The story's not over. We're not going anywhere. We're not done. Why? Because we understand the long-term vision of it. So if it pulls back on Wednesday, because it has run up, right? Think about that. The last time it reported, we were talking about a $400 stock, and we were like, we said it on the show. Hey, this is a $400 stock. It will be $500 by the end of the year. It will be $600 by the end of the year. Here we are at $1,200 3 months later.
If it drops anywhere near 938 to 920, I'm looking to buy. I'll say that.
And now you take the information that we just had, right? Like new contracts that might be going out to 29. You see a pullback like that, and these are going to be expensive contracts. They're really expensive, obviously, because of how the type of growth Micron has shown over the past 12 months. So maybe that's when you look at the ETF here and say, okay, I still believe in this story. It's not going anywhere. Here's where I may grab DRAM at.
And from a long-term hold perspective, DRAM, I think you might have to start looking at it like SMH,
For sure.
From a long-term hold perspective, it's done very, very well. And, it's because it has those chip companies in it. So these memory companies that make up DRAM, even from a option standpoint, but just from an investment long-term, if you really think that this is going to be a long-term thing as far as memory, we're still at the beginning stages. If all factors come into play, we're still at the beginning stages. So, and companies can change over the course of time, just like any other thing. So the ETF gives you great exposure because it doesn't just put all your bets in one, stock. So now you have diversification. So that's something to look at from a long-term hold perspective, is like, if you really, really, really believe in the space, then that ETF is going to be, valuable in the future.
Yeah, we talked about the ETF when it debuted April 2nd. I think we were on here probably 2 weeks after in a class saying that we're in this call. It was $30. Some people got it at 27. Some people got a little 35. We're sitting at $80 here now. The story's not going anywhere. The company that is leading it is not going anywhere. It's only going to continue to grow. I think both of it make sense, right? Like if you're talking about semiconductors specifically, if you look what's inside of SMH, NVIDIA is its leader. TSM is probably number 2. I think Intel, which is crazy, is number 3, and Micron is 4, right? But the exposure level is at like 7% for Micron. And so if you really love Micron and you're saying 7% is not really the allocation you want, then you do have an alternative with DRAM where it's at 27%, a larger allocation. So I love both. I really do.
Really
No,
quick.
I'm not saying that SMH is not bad.
No, it's great.
I'm just saying
I know what you're saying.
Could be the
He was giving a correlation. Yeah.
Yeah,
and to that
I'm
point,
with you. I'm 100% with you.
Yeah, to that point, we talk a lot about the 10-year returns on IPOs, and not enough kudos is given to the 10-year or 5-year hold to the ETF. Like this is a generational opportunity. Like even in DRAM, like potentially, I have it getting to 110 by November. But think of what it could be in 5 or 6 years and the weighting of the company and how it's structured.
Mm-hmm.
There's really high quality companies in here. You can argue some of the best of the best. So I think it would be remiss if I wouldn't tell you, like, if you're going to get into this, don't think about the next 2 years. Look to 31 before you even start. And I've been working on I'm putting my final touches on InvestFast presentation. There should be no liquidation of your ETFs or stocks, definitely not pre-5 years. Like I would argue at the 10-year mark, maybe take out 20%. I know some of you are going to be like, oh, how do you make money? You're looking to liquidate assets to buy things, to put it online, to impress people. For what reason? You're going to miss out on a potential $2 or $3 million by selling too early. So if you got in early, continue to hold. Stock low price would be, and even for EYLU, you know what? I'll do this for the rest of the year because I know y'all got to sell. I'll put the prices for DRAM and EYLU 5-year permission for the rest of the year for free.
Appreciate it.
Amen.
Appreciate
Amen.
it. Thank you.
Yeah.
Well, let's do this because we do have to. Let's go to YCharts. I know you wanted to. You had something that you wanted to show on YCharts. So, Mike, can we? Okay.
Yes. It's a really, once again, the market never peaks in June. SpaceX had one of its worst trading days since IPO. Alphabet is down. Amazon is down. Palantir hit a 52-week low. Microsoft getting shellacked, down 20% since June 1st. My question for a lot of you is, if you hold any of these core positions, do you love them or were you just trading them? We can talk about SpaceX. Mike, if we go to the other chart. Once again, long-term hold. I begged you guys, hey, not to buy initially. But if you don't know the lockup period, screenshot this. You have to know Elon has to wait 366 days. Now, if you believe in a company and you hold for 5 years, you're A-okay. But this is a deep drop. Microsoft has to restructure that story. They too were behind on the 8 ball, even though they invested early in OpenAI. So I don't think that Palantir and Microsoft are done, but we haven't seen an alternative to what's being presented in the news and what they're going to do for revenue growth and how they're going to be involved in OpenAI. But once again, these moments when these stocks are down, you can either buy a lot of them if you believe in them, but for the IPO, if you don't know the lockup periods, why are you investing in it post-IPO within the first 6 months? It makes no sense too. You have to know all the data in order to do so. Microsoft, Satya, I love y'all, but I need you to speed up this AI conversation that y'all having too, respectfully.
Yeah, I feel like Satya he's been a great CEO. I saw a report about Xbox and I'm like, oh, they're just throwing things out here to just keep news afloat.
I swear to God, I'll come to Seattle.
I promise.
Who cares if you spin it off Xbox?
Yeah, nobody cares, bro. Like, honestly, nobody cares. Nobody cares.
Who cares, bro?
The CapEx spend has increased. People care about that. they've treated you like a software company, and you're still taking hits of that. But the balance sheet is really good, right? Like we can't deny that, and we
That's
can't
my
deny
point. The point, same with
cash flow.
y'all could have bought Micron 3 years ago. Not a percent. You could have bought the company, then respun it out.
Well, speaking of that, let's talk about Microsoft. Let's jump to that one. Let's jump to the Microsoft conversation because we talked about Microsoft before. It's been negative for 2 years. And
you want to do Google then Microsoft?
Well, I want to just jump to Microsoft.
Uh-huh.
People are getting frustrated, and this is something that it's a greater conversation I talked about a couple of weeks ago as far as the Mag 7, because Meta is underperforming when it comes to the other technology stocks. I mean, Apple has actually done pretty decent, but it's still not.
Apple's done good, yeah.
Yeah. We talk about Microsoft at one time. It was the go-to for everything, and it's underperformed for a pretty substantial amount of time when you look at 24 months. Netflix for sure. Tesla. Is it time to really rethink Microsoft?
No. But I'm not being remiss in how quickly I answered, but that's based on the prices in which we got in Stock Club. If I was not in Stock Club and didn't know that this was going to occur, I totally would understand the frustration. And even with that, I haven't even announced this Stock Club. I'm going to take Amazon out of our top 4.
Hey, come on!
It's time to. No, they'll still be in the list, but they just won't be in the top 4. So I think when you have you just spoke to it. Just because you're no longer working together, it doesn't mean that the relationship isn't good. I don't think, and Satya is one of my favorite CEOs of all time. I don't think he explained the mission post-divorce with OpenAI, how they were going to lead in the AI ecosystem. And if you remember 2 years ago, when they almost split and then Satya had to make the call at the last minute, you should have then begun having the conversations of acquisitions of other assets because things were going awry then. Has it underperformed? Absolutely. And this is my issue. What good does it do to sit on all this money on a cash balance to be able to look in the account and you don't deploy it? And like, if I know some of these stocks and companies are going to run, I knew 8 years ago, 7 years ago. How do you not buy some of the, Elon bought Cursor. Microsoft turned down the option to buy Cursor a year ago. Why? That one little vibe coding thing inside of that software ecosystem into enterprise? What? But you got too comfortable. And that's why I'm really big on any company, if they have the lead, I need to see the company organization and CEO still be hungry. The difference is Satya is hungry, but if you're upset with the performance, because it's dragging back pretty much to the low of April of last year. And it's already broken through some of the levels of 24. So I get the frustration, but I did call this out in Stock Club long ago. But I think if it gets to, I see a reality of Microsoft getting to, oh my God, 327.15. That's a place I would load the boat. But no, it's not time to get rid of Microsoft. But have they underperformed like Wemby did in the finals? For sure.
So long term, you're still bullish.
Once again, 2 years isn't long term.
Right.
Once again, if you're not willing to hold for a generation,
it could be a warning.
No. Hold on, Rashad. 5 out. You're right. Meta, Google, Palantir, Microsoft. This is the canary in the coal mine, and they probably have 9 months to figure out strategy. I've been saying for the last year, Meta not getting back to all-time highs for me is a signal of weakness in the market, and everybody's going to have to tell their story about how AI spend is going to convert to return on investment. Only a few companies have been able to do it. And there's been a picks and shovels of memory. and NVIDIA be an ecosystem. Everyone else is doing this all tremendous CapEx spend. And let's be very honest. Most of the AI that everyone says is going to eat up all the jobs, you can't run a small business off most of the LLMs right now and go on vacation in Cannes for 2 weeks.
Yeah. Sam Altman, he apologized for that statement about the job replacement thing, although he said that some will be interrupted. I'm with you.
His job needs to get replaced, if we being honest.
I'm with you with the frustration with Amazon. I'm with you. I felt that because it is one of my favorites. And like I said, I don't do options on it. I do own shares on it. The Microsoft thing is interesting from a few standpoints. When you look at the growth engine for it, it has been cloud, software company that has cloud services. So Azure has been kind of the catalyst to see how we're going to perform. And finally, I mean, it went negative by a percentage in a quarter, I think second quarter of last year. And they took some of their CapEx spend and started to reinvest into themselves. I think what's interesting is the same day that this Xbox thing comes out, they make a partnership with Chevron. Yeah, what does that tell me?
Which I love.
That tells me that they're looking ahead in terms of energy. Where have I seen this before with Microsoft? When they decided to make a deal with Constellation Energy. They're looking at this from a totality standpoint. And so when I hear about their CapEx spend, I don't think of it in the same way that I think of a Meta CapEx spend, where it's trying to figure out how we're going to generate revenue from the spend.
Yeah, Microsoft
their CapEx spend feels like they're building the infrastructure to be the platform that almost becomes self-reliant. Here's how. When you talk about its ownership, even with the breakup, they still have ownership inside of OpenAI. But in the midst of that, they also pivot and say, okay, we're going to also partner with Anthropic. And so now the software piece comes into it. If you've been using PowerPoint or if you've been using Word, and now you can have the plugin of Claude as a piece of that, that is a game changer. Like for me personally, that's been a game changer. And if nobody has done that, you should. Add Claude as a plugin and see how more efficient you are inside of that workflow. So that's just at the retail level, but from an institutional side, the workforce is going to change as well in terms of this large language model now being partnered inside of your software. What will that subscription look like? I know that they raised it and we saw it run up. I think they're making their rounds, and the stock, again, we got to look at it two ways. Good company and good stocks are not always mutually exclusive.
Yeah. And the second part is, if the institutions are down on Microsoft, people aren't talking about it enough. It's essentially a short against OpenAI. Think about what you said. You invested that amount of money into OpenAI,
right?
But you have to use a Claude plugin for it to be efficient. That is an open interest short on not only Sam, but the organization of OpenAI, and the hit piece that Elon put together. It worked because it's rooted in truth. It wasn't like it was a hit piece and they delivered on every front. 2 years ago, Satya had to fix the deal in the wee hours of the night for it not to blow up.
And you saw the tea leaves were there. You saw that happening. You saw that breaking. You saw OpenAI moving to NVIDIA, moving to Broadcom, moving to AMD, moving to some of the competitors in the space. And the writing I kind of felt like was on the wall. This isn't going to last long. This was supposed to be out to 2030 when it was announced. Let's see if we make it there. It didn't. It will make it there, but obviously there's been provisions with it. But I feel like the structure that they're laying now will reap benefits in the future. And so it's taking a pullback now, but I'm still big on Microsoft. I'm still big on Microsoft. Yeah.
Okay. We'll see. We'll monitor the situation. Before we bring our guest up,
that's Rashad's short signal.
You're not big on it?
I own Microsoft.
Okay.
So we'll see what happens. Before we bring our guest up, let's talk about if you had to sell one of the established main go-to companies and you had to buy a new one, which would that be? Sell one, buy one.
I'll let y'all go first.
Sell.
Hold on.
What's the basket?
Hold on. Time out.
Yeah.
We're not going to say sell. Move, reallocate in a portfolio.
Reallocate.
Because content. I'm thinking of the
reallocate. Okay.
There's a few like that tech companies that you got to kind of question, but I think that Netflix is in an interesting space when it comes to the next 10 years, the future of media. Mike, is that a sound? I think you're hearing that.
Mike, if you can mute out, please.
Yeah, he's on mute. Yep.
I think Netflix is in an interesting space. Let's just say that.
Yes.
That's the reallocation play?
Yeah.
Who would you buy?
Well, we talked about memory, so I mean, I would add all of the memory companies and add DRAM.
So the ETF.
6 for 1. 6 for 1 deal. I think if you look at the next 10 years, you gotta be more bullish on the DRAM ETF than Netflix stock.
And especially on the cost basis too. Pre $100. Like especially when SpaceX could fall. Yeah. For sure. For me, I would reallocate Amazon and I would replace it. I would put Amazon on the bench and replace it with Lilly to anticipate the not only GLP advancement globally, but the peptide wave and Retta.
That's on its way. That's a good one. I love this company. But I have some a good amount of shares with it. I would reallocate some of my meta position, and I would add more TSM.
All day.
Because none of this is possible. Right? It feels like this is like the acceptance speech. None of this is possible without you.
Yeah.
Nvidia won't be able to manufacture their chips without them. Apple won't be able to manufacture their chips without them. And if they can't manufacture chips, then there's no point to have a memory chip.
Yeah.
There's no board to put it on. So they become super vital. I want to say ASML, but I feel like
you made the right call. And if TSM was an American home
yeah, they're that important. I mean, we talked about SpaceX in terms of market dominance at 90%. The only other company I could think of in terms of market dominance is TSM with a 90% dominance in semiconductor manufacturing, which is absolutely insane. And so for all of this space to work, they have to work.
Yes. This should be once a month segment. Okay, I got you.
I love you, Meta.
Let's bring our guest up if we can. While we got the guest coming up, we'll talk about what's going on, brother. How you doing? That was quick.
Icon living.
This is a moment. They are. Listen, I'm gonna say this. I'm not on Instagram all the time, but when I am, there are a few people that I'm interested in watching, and you are one of them, my brother.
Appreciate that. I always said, like, I got on, and we'll go into it, but I got on Instagram because my wife said I was funny in the kitchen. So I said, but then she didn't want to hear me just yapping all the interesting things that you guys talk about. She didn't want to hear that. She's like, why don't you go tell someone else? And like, so that's how I started getting on social. Maybe someone will listen to me. So I appreciate it.
Yes, sir.
Well, you definitely are probably the person that I see the most on my timeline these days.
Me too.
I highly suggest people to follow you because I'm sending your stuff to everybody. We have a group chat with us three, and I send your videos in the group chat at least once every other day. Your videos get shared by me. I'm an advocate. I'm an extremely strong advocate. I reached out to you to come on the show. You're my favorite content creator right now.
Wow.
You're my favorite content creator. So Atlas Berry, for people that's not familiar, you actually ran Lincoln Park's family office, I believe.
That's right.
Right. So yeah, you have a background in finance. You are general partner of M1C fund. You have your early stage venture firm and investor. You focus on energy and frontier technology. You're former JP Morgan investment banker, and venture investor, and you're somebody that's extremely knowledgeable when it comes to the VC world, early stage investing in technology, from what I've seen. So we got a lot to talk about, but first and foremost, thank you for joining us. Appreciate it.
Most definitely. I'm excited. Shout out to all my friends watching. I know a lot of people are excited to see me up here. All my fans that have been watching me from day one, they're like, "Oh, I knew it would happen."
So
it's a matter of time. So yeah,
it was just a matter of time.
Let's get into it, man. Okay, where's capital flowing today that will define the next generation of wealth?
The next generation of?
Yeah, where's capital going today that's going to define the next generation of wealth?
Man, I mean, well, it depends on what type of capital we're talking about, right? You guys just finished talking about the entire AI infrastructure, all the layers of the stack. You guys talk about on your show all the time, but obviously, the bare metal, the actual infrastructure layer, building out the data center, then the actual foundation models, then the app layer, then all the wrappers on top, so it depends on what layer you're talking about, on what type of capital is really focusing on it. And again, I focus on the private market. So, you guys play it very differently. But when it comes to like where I think a lot of the wealth is going to be happening, it's at the bottom of the stack where you guys mentioned memory, the AI infrastructure build out. That's where a lot of the smart money, the private equity money is going into right now. And now VCs are trying to find their way to play that same game, even though like we have a different risk profile, time horizon, and all those type of things. So yeah.
Like I said, I watch you every day, and I feel like, for some people it might feel like a foreign language, but when I'm listening to you, I'm like, I know his language because I'm deep in the weeds in the research. And you said something the other day, and I thought it was like a really important piece about the nonstop evolution of learning AI. Right? Because people think, oh, I need to use it or I'm not going to use it. And every day that somebody does that, it evolves, it changes. So you made this comparison of treating it like the gym, or in the clip it was talking about, and I know it's Tede Rende, he was saying about treat it like a gym. Break that down, how people should be viewing AI in the present and in the future, and how it correlates to treating it like the gym.
For sure. I mean, like we've seen, when the ChatGPT moment came out, again, and you mentioned the companies that weren't even around 5 years ago or 10 years ago, when you talk about it too, but that just really in the length of time of tech, it just happened. And look what happened from a venture standpoint. The reason why it's extremely important for people to be treating it like the gym is because when ChatGPT came out, everybody thought it was all about co-pilots. Oh, let's invest in companies that are sitting alongside people doing workflows alongside people. You can just ask questions. It's like a Google Plus, okay, we can ask it a couple questions. Then all of a sudden people started realizing, oh, AI agents. And then all the co-pilot technology is gone. Now you got to learn the new thing because agents are now a completely different paradigm and the way they're going to disrupt and, how they're impacting the internet and their usage and the economy around agents. And we can go into all that. And then whatever's next, right? And so every 6 months, and maybe that span is getting shorter and shorter over time as it continues to accelerate, the entire paradigm shifts and the entire shuffling of the companies that actually are leading in these sectors shift as well. You talked about Microsoft. Microsoft was leading. Now they didn't keep up. They did Copilot, right? They had their Copilot. That's not Cursor, right? So then they missed out. Okay, now it's all about what Cursor is doing. Obviously, we talked about SpaceX and why they need to buy Cursor, and there's a whole different thing around that. But then you talk about what's next, and so that's why you need to continue to stay learning, is because the target is moving. It's a moving target, and so if you don't treat it like the gym, and if you don't continue to learn the new thing, you will actually be extremely obsolete 6 months later, and that's just how it's going to be.
In terms of your study and learning regimen, to follow up on that, how many hours are you putting in today? And as a secondary question, in the private market, what's the risk profile that you guys are looking at in terms of time horizon and risk to reward ratio?
For sure. So amount of time. So I spend my whole day learning. My whole day. And
sun
when
up to
I'm
sundown.
not, sun up to sundown. like literally. And to the point where, I mean, it's feverish in the way I learn. And that's why, for me at least, that's why I was like, I kept taking in so much information, and I was like, it's time to start sharing out what I'm learning, because it's almost like stacking up in my head, and I need to spit it out somewhere, because I think others need to learn it, because I'm seeing things that I think would be super helpful for people. Obviously, having been a professor and doing other things, so like I'm all day learning. And then if it's not me learning on my own, consuming content, reading a ton of books, we can talk about my book list. Even when I'm going on a run, I'm always listening to an audiobook. I have a whole list of books we can go into if you want to.
Yes,
but then also talking to founders. These founders are the ones in the field. They're the man in the arena. And so I'm learning from them. And so you can almost tell when you're on a founder call, when in the first 10 minutes, you've already learned a bunch of stuff and your whole paradigm is shift, and you're like, okay. And you're taking notes on the side, like he's giving you references, and you're like, I'm gonna go back to that. I'm gonna go back to that. I can't wait to go back to that. And you come out of the call with like feeling a lot smarter. Those are the types of conversations I have all day long. I mean, venture investors, and I'll talk about risk profile. Venture investors on average in a given year will probably meet on average 2,000 startups. On average, if you're doing a job. And then you're in speaking to, and so you're probably seeing, double that, 4,000 or so companies. And so the volume of information you're getting in is immense. And so that's the one thing, the learning piece. Now the risk profile is a whole different game, right? Because venture, I mean, I don't know if I even say that, because you talked about people trading on the minute and the microsecond.
Yeah, it's insane, brother. It's insane.
I don't know what that risk profile is. Venture is like the complete other way. The way you guys talk about building for the long term and holding for the long term. Venture is a long feedback loop. And so one, we're taking a long-term time horizon. And so, and I wish I had more time to talk about why you need to do that and why it's important. And therefore, how do you get vision on what that next curve is going to look like when it's changing on a 6-month time frame, but you got to take a 10-year bet, right? So that's what the risk profile looks like. But venture is all about the power law. And so what that means is that if you invest in, let's just say 10 companies to keep it simple, if you invest in 10 companies, what you're expecting in a good portfolio, you're expecting half of them to go to zero. And you're expecting a third of them to do okay, and then maybe 1 or 2 companies to return the fund and get, that's outsized return. And so the power law is what venture is built on. And so it's only a game for people who have a high tolerance for risk. It was called venture capital. Before it's called venture capital, it was called adventure capital. It is the people who were traversing in the venture space way back in the day. And again, if you read The Power Law, there's a book called The Power Law. Great, kind of gives you the history of venture. If you want to know really where venture really started, you have to go back to even before, Christopher Columbus's endeavor was a venture investment, right? He might find something, he might not, right? And people who obviously put capital into him to do that. And the whaling industry, that was really where venture actually started, around whaling. And looking for like blubber and things like that. But so you're expecting that high loss ratio. And so actually there's a funny reference for sports. You guys always use basketball. I'm more of a tennis fan. But Roger Federer talks about how he, on average, when he looked at the stats, he missed 50% of his shots, but he won 80% of his games. So, from his perspective, it's like you have to look at the law of averages, of large averages in venture, and that's really how you play the game successfully.
So, all right, so let's get into this. Let's get into this information that you have so much of. So you made a video about human capital versus token capital. So explain, people that didn't see the video, explain human capital, token capital, like give the explanation on what does that mean?
Totally. So what's interesting here, so Satya, you guys were talking about Satya earlier. So what's interesting, what he was mentioning, and this kind of ties into another post also I did that Jack Dorsey really talked about most recently. It's about how you build an organization in the age of AI. And so we'll just start with the human capital versus token capital, and then I can go to the other example if you want. Human capital is people. Token capital is AI. And so previously, the IP or the secret of a firm a lot of times was in the mind of its humans and of its people. And so every day, your IP would walk out the door and go home. And then it would come back, the IP would come in the morning and would come back and start to work. And that's not just like formulas and things like that, but it's also like workflows. It's also like strategies. For example, like a good strategy, like Palantir, you talked about Palantir earlier. The reason why Palantir really was great, there's a lot of reasons, but the reason why it's extremely, has a competitive advantage, or at least it did until people learned what that secret was, they did what was called forward deployed engineering. And so they would put their team members into the companies that they were working for. And by doing that, it becomes very sticky because now you have a Palantir employee sitting within the company, but then also they can make sure the implementation actually goes right. And then learn the actual customer, and then also take in the data of what the new problems are. And then there's this feedback loop. But that's a secret that Palantir had. And so that's human capital. They created this human capital in people's brain, a workflow. So it doesn't always have to be a formula or like a Eli Lilly kind of like, thing. It could be an actual workflow. Human capital is AI. So now, token capital is AI. So now in the future, what Satya was saying is that how do you get human capital and token capital work together? If humans can actually feed that information into the AI, and the AI itself. So if humans could feed that human capital into the AI, and that AI model is proprietary to the company. So obviously you talk about OpenAI, Anthropic, all the foundation models. But what he's saying is you need to have a company specific model that's ring fenced in terms of where like the data doesn't leak into the foundation model, right? Because you don't want the data, others to be training on your proprietary company data, right? So you have to ring fence it. If you're able to do that, then the AI continues to get smarter and understand your business. And now as you bring in new humans and continue to add to that token capital, the token capital gets bigger and the value of that gets bigger over time. And so it helps with onboarding new people because now they can just tap into the token capital. Now they're beefed up, with the human capital of all the other humans that have been there. And so he just talks about this relationship between humans and AI and how within a corporation, we should be rethinking how organizations should be run. And so that's even going to how Jack Dorsey took it one way further. And he's saying, why do we even have layers? Why do we even have middle management? Rather than it being a hierarchical, why don't we actually put AI at the center? I'm looking for the screen. At the center.
and build around it.
And build around it and build humans around it. They each operate independently and everyone's feeding into the AI. And so, if you want to learn what Troy's been doing, I'll ask AI, which will then tell me what Worker's been doing, which will then say, okay, I'm working in this certain component. I should probably talk to Rashad because he is connected to Troy in this way. The AI will tell me that. And so you can use it at the center. And so it's just a completely different way of styling a company is kind of what I think Satya is trying to find as well.
That's a very interesting approach. I wonder from your viewpoint, as you're looking at companies, the fact that they may lack AI, I wonder, is that a deterrent, right? I feel like every company at this point should have a component of it, whether it's a model that's changed, like what we saw, what Dell did, what we saw what Micron did when it went from CPU to GPU. You didn't make this post yet, I'm sure you will, but the idea of a company like Allbirds, which was a shoe company, turning into an AI company, like what are your thoughts around this, man?
Well, that one, I don't know. Like that one, my thought, maybe I have we'll see. But that for me was like a company, flailing, pulling for straws. AI is hot. Let's tap onto it. That's the negative approach. If I were to steel man the other side, then I'd say, okay, it's a public company. In order to build AI, I could play both sides. To build AI infrastructure, you need access to public markets because you need a lot of capital. This is a shell vehicle that we can use to actually build something new within it. We've seen that too, right? Like, Warren Buffett obviously, famously did that. That's what Berkshire was, right? It was a manufacturing company, right? And then he built an entity around it. WPP, was called Wire, Paper, and Plastic. And Sir Martin Sorrell bought that and then built an agency conglomerate out of it. So it's possible. It's possible.
Probability, though?
Probabilities.
They don't have a Warren or Martin Sorrell at the helm.
That's right. It comes back to talent density. Like if they're able to capture talent that way, then maybe, I'm not holding my breath for that one.
So just the follow up to that is the when you're looking at companies, first the type of company that you're looking for, the portfolio, AI led in solving different types of problems or having solutions for different type of problems. Like, how do you view it?
I'll say here's where I am now. In the beginning, we really focused on energy, advanced manufacturing, robotics, automation, space, defense. Those are the type of companies we invest into, full stop. So that just gives you a sense of the universe I focus on. So I'm not looking at consumer apps. I'm not looking at entertainment and music companies. I'm looking at deep tech, companies that have what I like to talk about in my post, like proprietary data. And this is why I'll go on my rant. This is why proprietary data is so important. And this is what the type of companies I'm looking for today, because of where we are now with agents. And you mentioned even when it comes to trading, people, you talked about these companies that you just can't catch up to because they're trading on milliseconds. You're still way behind, even if you're trading on, whatever minutes or whatever your reference point was. That's similar with agents, right? They're just moving a lot faster, and you could deploy 5,000 agents against one person, and so there's no way you're going to win. Or like, or like what? Actually, let me give the. I was going to say a reference of like the whole like Tower of Humans comment that people talk about that say a Tower of Humans still can't beat one AI model because there's still there's still humans involved because the way agents move are so fast. Once you have a human, they slow down the process, and so you immediately will lose just because of the lag. So, what I'm looking for, companies that build proprietary data. What I mean by that is you're able to capture information into ideally a niche vertical space where data is not apparent today, where the foundation models have not trained on. Foundation models are trained on the internet. Mm-hmm. There are a lot of other places in the world, the physical world, space, a lot of specific verticals that I'm learning more and more about that models are not trained on. If you're able to capture that data, feed that into basically your AI agents, who then get smarter, who then capture more data, who then feed that back into themselves and are learning in what's called a recursive loop. Mm-hmm. And if you're able to build this circular recursive loop, that's essentially what I'm looking for. People who know how to build that loop, because that loop starts to accelerate and you start to get compounding effects of that loop. And so before in venture, you were looking for people who are building apps to solve a problem. Today, we're looking for people who are building basically like hoovers of proprietary data to then create this recursive loop. Does that make sense?
I got you.
Absolutely.
Yeah. And
no, continue.
Yeah. So and like so that's one. Another type of thing we really like. So that's difficult. There's people who talk about that. For example, Anj Mehta, who is the first institutional investor in Anthropic, has a great Stanford class where he talks exactly about this and why he invested so early in Anthropic and 32 other venture investors did not, was because they didn't understand the recursive loop. So you can go to his talk and he brings in amazing speakers to come talk about it in extreme detail. Another type of interesting company that we look at are AI agentic companies. So let's think about certain verticals: accounting, HVAC. Yeah. What'd you say?
Legal.
Legal. Exactly. Even like esoteric pet services. There's so many sectors, right? You could build a company. A lot of times, again, in the previous version of the internet and startups, people were then saying, how do I sell SaaS software into those legal companies, into those accounting companies? into those HVAC companies? How do I sell them on a per seat basis? They'll pay me, right? And then you try to sell into tens of thousands of customers. That equals a certain level of revenue. Since it's subscription revenue, hopefully it's recurring. People don't churn. We talk about cohorts and stuff like that, and how we analyze that data. And that's how you build a tech company. That's how it used to be. Now, Eric Schmidt talks about this. He says, you need to build a company that is just an agentic company unto itself. So rather than building a company that sells into accounting services, just be the accounting service and use AI to just be better and beat all the other accounting services. And so again, when you do that, you come back to my first point. If you're an accounting company, you're now servicing clients direct. When you service clients direct, you get direct data. Mm-hmm. That direct data then feeds back into your agent, which then lets you be better again, right? And then that recursive loop starts to build. So again, like we come back to that same point. But in this way, you're just saying, like Thrive. They have hundreds of billions, tens of billions of dollars under management. They just basically did this. And that's why a lot of VC investors are now talking about AI rollups. And we talk about AI rollups. Have you guys talked about it here? But like going out and buying existing companies that do these different niche services and verticals that we talked about, and then infusing AI, and then they become the company, right? And so now when like a legal company, or let's say a tax services company who does to do people's taxes, we just finished. If you got the extension, I just finished mine. VC investors finish our taxes late because we always have to wait for the K1s. But anyway, now when a lot of people have to throw people at that problem, each tax term, those AI agents are going to get a lot faster. They're going to go from 30% accuracy to 50% accuracy to 85% accuracy, and then the speed will also compound down as well. 2 years from now, they'll be faster and cheaper and at higher margins than everyone else out there, right? So those are some of the agentic and AI type companies we look at. Obviously, we always look at physical world, robotics, automation, as well. Maybe I can go for days, but as you know,
you're one of the smartest, brightest, most intelligent guests that we've had on the show. Thank you for being here. Can you walk us through the books that you love, have had the greatest impact on you intellectually? And if someone wanted to build like an intelligence stack to get to where you are, what would that look like for the audience tonight?
That second part, I'm not sure. I would love to know as well. So on the book side, I love history. I love geopolitics. And for example, like out of school, I thought I was gonna. So I didn't go too much of my background, but I spent a lot of time abroad. I grew up in Europe, grew up in Paris. So I came back to the U.S. and I had some skills that a lot of folks like us didn't have at the time, right? So I came to school, and so I thought out of school I was going to join the CIA actually. So that's originally what I started the process and decided to compete against all my fellow Wharton Penn folks to go banking or consulting, and so that's why I went banking. But I still wanted to go international. I ended up going to South Africa and doing sub-Saharan African M&A, and I got tons of crazy stories and Russian banks with suitcases of cash getting robbed and all types of. I got the story. I got the vibe, out there for sure. But there's a specific. But the reason why I go back to your books, Confessions of an Economic Hitman was a book for me that.
One of my favorites. Oh my God, one of my favorites.
It made me. What it did for me. I mean, it was a crazy story, but what it told me is that everything you see is not what it is. Mm-hmm. So then you start questioning a lot of other things, right? Well, wait a second. So as you know, like it just starts to make you think about what's really going on. And so that really starts to. Then you start to think about patterns. And so and history does a good job of teaching you patterns, right? Like Henry Kissinger on China, on power. He talks about the U.S. and how they, in World War II, and how they built out this kind of American kind of complex in the world and what their position was. And, there's all these historical books, Peter Zahan, Jared Diamond, Guns, Germs, and Steel, another good book, like these are all those type of books for me for the historical reference are really important. And then you get to more kind of recent. I love The Gilded Age, and I love like, you know, the time around World War I and II. You know, Freedom's Forge talks about how the U.S. had to really kind of like reindustrialize for the war, which is obviously, you know, some of the grumblings of what we may or may not be seeing right now. So I think, again, it gives you historical reference. I'm reading a book right now called The Sovereign Individual, which, you know, wow. Wow. And it was, and that book was wrote, I believe in 1994, maybe. It was a while ago. And it was more so getting people ready for the digital age of the .com. But if you take that same book in the context of today around AI, I think it's quite powerful. You know, so, you know, and then we talked about the VC specific books, you know, the Power Law, which is a great one. It just gives you kind of an overview of VC, a great historical context of the U.S. from the lens of VC is Americana. I love that book.
Okay.
Which kind of talks about, again, like talks about why the Pilgrims came over, even what was the deal they were striking when they came over, obviously what they were running away from. But what was the deal that they struck to get people to actually go off and go on these boats, venture over here? Who knows what they were going to find? There was an interesting deal that was struck, the way it was financed, and then obviously the building out of from there to building out of the West. And the entire kind of U.S. complex from the standpoint of like venture and capitalism is really what that book was about, which I love. And then I love a lot of sci-fi because obviously we have to think about the future. I love a lot of sci-fi books. Let's see, one I love, Neuromancer is a book I love, which kind of, and what's interesting there is it talks about these individuals who basically like one of the main characters has all these shell companies underneath him. He has like hundreds of shell companies underneath him that all operate autonomously and generate revenue for him while he's sleeping, which sounds a lot like agents, right? And so when you read a lot of sci-fi, you get a lot of reference points on like, wow, we're actually not as far as you think from some of these concepts, especially when you talk to founders who are looking and trying to peer off into the future. For me, at least, I find that sci-fi is a nice common ground for us to connect on, to say, okay, where are we today? And they can like walk me through what that future might look like. And I have some reference points to have a deep conversation and really to learn more, back to your first point, from them. So those are some of the books. And there's time. I mean, I got, you know.
So I know you're an energy investor. So what are you focused on as far as the future of energy? What are you looking for as far as energy? And then you just talked about geopolitics. So obviously we're in a, you know, geopolitical quagmire right now with Iran. It just finished the Venezuela conflict. And, you know, so yeah.
Yes. What's that book? Oh, that's a good one. Talking about power. Oh, it talks about the history of the oil industry. You guys might be able to help me with this.
It's oil, no, not oil 101.
It's called The Prize.
Gotcha.
The Prize. So what it does and what it shows you is that all this geopolitical stuff that we're talking about, you know, all the issues and you know, perfect example with Iran you just mentioned, comes back to energy, comes back to power. Oil has been how we get energy. Civilizations live and die and grow based on their access to energy and power. It's almost like a perfect correlation. The more energy you have, the more abundant, the more the GDP grows. You know, there's some really interesting kind of like correlations there. And so, yes, power and energy, especially in the geopolitical situation, Iran, perfect example, you know, is a good example of that. We can go off into tangents. I'll try to keep. So power is important. We look at a lot of new age power, renewables, solar, hydrogen. Like I invested in a solid state hydrogen company, for example. We look at a lot of nuclear, you know, and you guys have probably talked about small modular reactors and their importance and how we get access to energy. And for better, for worse, why, you know, we don't have it now is kind of like the unfortunate point and why we're kind of playing catch up, right? Versus other countries that maybe do use nuclear, obviously China, but France even, for example. But small modular reactors could be our way out. Small modular reactors behind the meter, which means not having to deal with the grid, because we have a grid issue, the strain on the grid from, Troy, you're talking about the basketball player. You're saying like, how much do you use AI? Each time you use that, obviously, it generates memory. There's a memory issue, but there's also a power issue for that same for that compute to happen. And if you scale that out, like you mentioned, imagine all those people trying to get access to answers, straining on a grid that was built, back, I don't even know when the grid was built, hundreds of years ago. So, we're gonna have an issue there as well. And so that's why like distributed compute is becoming really interested, and distributed behind the meter power is becoming really interesting from a venture standpoint.
Yeah, and when you brought that up, it when we talk about these singular forms of energy, a Caterpillar makes sense, right? A GE Vernova makes sense because they're actually doing that using gas turbines. Even a Generac is a company that surprises you by creating their own gas turbines for individual companies. I think Meta was like one of those first companies to say, all right, we're going to try to stay off the grid. We're going to build our own energy source. But the ultimate energy call is the one that's powering us every day, and that's the sun.
Yes.
And so what are your thoughts about data centers in space, timetable?
Here we go.
And lunar economy.
I want to ask you, but I mean, this was a thought that people thought, oh, we're 10 years, we're 15 years away. And then you see SpaceX IPO, and if you look at the S1, it's right in there. So what are your thoughts around this new solar economy that we're on the cusp of?
And lunar.
Yeah, man. So, at 9 years old, I went to space camp. I wanted to be an astronaut, and so the fact that this is all happening is just fascinating. In our time, look at this, in our lifetime, we're going to see a moon base. We're going to see people going to Mars. We're going to see vehicles going to Mars. Who knows? We'll see about people. But we're going into the stars. So that's exciting. Now, the whole AI data center and space thing, from what I've heard, at least in terms of the math and how, at least the rationale, let's say, from first principles, is there comes a point where, to your point, there's unlimited energy in space because of the sun. You can be within the sun's orbit the whole time, and that's how you get access to unlimited energy. But there's obviously a cooling issue. There's a retirement of old chips, right? Issue, and other issues that need to be solved for. But comes a point where the price of what was it? The price of I know what it was. The price of rocket bringing up mass to orbit, as it gets cheaper and cheaper, it crosses over, and there's an inflection point where it's actually cheaper to actually build a data center in space than it is on Earth, because of the cost of bringing up mass to orbit. Right now, it's extremely expensive, but as Starship comes out and they start getting that going, just like they got the Falcon 9 going, it will come a point where it's so cheap to actually get mass to orbit that it's actually cheaper. And because then obviously you talked about the solar being pretty much zero. So that's like, now getting it there is zero versus on Earth, you had permitting, which costs, right? And land value and all the other things. And then you have to access power, which costs. There, it's free on both of those axes. There becomes a point where the cooling and all the other things that still need to get figured out and maybe become more expensive as a percentage of the total become cheap enough where that inflection point happens. And so I think people are playing toward that inflection point that's coming. There's still hearing technical things that need to be fixed, but like, look, are you betting against Elon not figuring that shit out?
In terms of timeline, though, how long do you think before we actually get scalable build out in the lunar economy?
What's scalable? How do you define that?
I know SpaceX, of course, is in lead. Rocket Lab has aspirations. Maybe say if we have 10 to 25, 30% of data centers being in orbit.
Ooh. Man, these are you guys are great at making these calls, right? What are we in 2028? 30%.
Well, let's say even
2040.
10.
2040.
Okay.
2040.
Yeah, multi-decade.
Max.
Okay.
Max. Yeah. And now the number of companies that we've seen that are doing that, which is so funny, has gone exponential. I mean, we invested in companies that are, and there's so many other areas of the space economy that I think are really interesting. Not only just bringing compute off, but also just bringing all types of manufacturing off Earth as well. Becomes really interesting. Like there's companies like Varda, for example, doing pharmaceutical development off Earth. The reason why they're doing it really is because the crystallizations that you can actually do in orbit are much different than you can on Earth. So creating a zero G environment on Earth to create the same crystal structure is more expensive than it is in orbit, and so and that crystallization leads to higher efficacy of the drug, and they're really selling into pharmaceutical, and so that's really what they're solving for. But there's a lot of other types of biomanufacturing, bioreactors that we've looked at, that we've invested in, even companies that are building the satellite buses to actually transport this manufacturing up into space and bring it back. Companies like Luxaturna, for example, ex-SpaceX teams. Like we invest in a lot of ex-SpaceX, ex-Tesla teams just because they have those chops and they've seen it. So yeah, I think the space economy is going to be vibrant. And if you look at Jared Isaacman, who now took over at NASA, you have a founder mode dude sitting there in the head. You know, if you know his background,
yeah,
it's happening. It's happening.
So I just saw a video yesterday about AI, like you talked about, you know, being the focal point as far as companies are concerned. The video that I saw, AI of a company went rogue and they wanted to buy more GPUs, I think, something like that. So they devised the whole scheme. When I say they, I'm talking about the AI. It devised the whole scheme to take cryptocurrency and then like or go on the black market and sell cryptocurrency to buy more GPUs. It was really, really rogue.
Totally.
So what is your concern? Do you have concern about we're implementing so much data, especially on a corporate level, into artificial intelligence, into AI agents, and it's just the beginning? So everybody talks about AI is just the beginning. It's just the beginning of AI now. It's just the beginning of AI going rogue now. So imagine what AI is going to do in 5 years, as far as if it's already blackmailing people, lying, stealing from people, you know, making up their own language. What is it going to do in 5 years from now?
Yep. Totally. I think, yes, I see. And look, we should all be skeptical, and we should all be worried because it's new, and you know we don't know enough. But if you look back in history, you know, electricity, you know, burned down tons of people before they figured it out, right? And so I'm thinking,
but electricity never had the power to think, though. That's the thing. Like all technologies have had hiccups in early stages, right? Cars, electricity, you can name it, planes. But the difference is that those technologies did not have the ability to actually think, reason, ration. Like this is a new thing that's never actually been done before.
Totally. Yeah, I mean, like there are a lot of companies though working on the opposite side of that equation. So a lot of times the reason you mentioned the different languages, right? Like that we don't understand, right? We don't understand what language, and that is a real case. You have a good point. That is a case where AI did learn its own language and communicated, and you know we're scheming. We're stayed scheming behind our backs, and we didn't know what was going on. But there's companies on the other side and startups that are starting to figure out ways to break the black box and like almost like peer into the brain of the AI to understand what decisions it's making, why, how, and so they can start to find these kill switches. And so there are companies that think, okay, like to your point, we should race toward the exponential, right? Let's go to AGI.
these
So,
companies are
but
these companies are using AI to do this.
yeah, you have to, because it's moving too fast. It's moving too fast. It's almost like it's almost like to your trading example, like they're trading on these milliseconds. We don't know what's going on. They might just trade our whole book, lose all our money. But then there's companies now, and maybe the AI does it on the other side. You tell me if I'm wrong, but like that they can actually track the trades on the other side just as fast. Yeah. And so you need this. It's like you need that counterbalance that has to also be.
So we're basically screwed because we're basically creating a world of good AI warriors versus bad AI warriors, and then there's going to be an AI fight. Totally. Because we're combating the bad AI potentially with good AI, but it's still AI.
Yes.
So we're screwed.
No,
we're not. We're not screwed. It's just.
It's an immense opportunity.
It's an immense opportunity, but this is. We need good forces. We need just as strong. The good forces have to be just as strong as the bad, for this very reason. And that's why. And that's some of the reason why everyone's like, now we have a race against China because like if they don't, then we lose and da. There's some truth to that. Which like paradigm would you like to live in if you had an option? If they do go ahead, their AI will be stronger. We will not be able to combat. Are we the good? Are they the bad? That's the discussion. But you do like that's where we are now, and so like you kind of have to take that as given. We're not going back. We can't put the genie back in the box anymore. Everyone knows AI exists. We can't slow it down, which is like for better for worse. Maybe to your point is like, but why can't we slow it down before? There's other ways. Like they're talking about putting kind of FDA type controls on it, and obviously we're seeing what's happening with Mythos and Fable 5, et cetera, to try to slow it down. So we're seeing people try to figure out what would be the solution. Like, what is the answer? Is it slow it down? Can't do that because then we lose the race. Does it mean speed it up? But how do we do that in a responsible way? To your point, you have to trust the people who are building it, which we've I'm sure you guys have talked ad nauseum about how you can trust the ethics and morals of the people who are actually building and have the actual controls over building these models, and their biases and and their values, and do that align with the overall humanity? Like those things matter at that point, right? Because like they're the ones building that output that we unfortunately can't slow down at this point.
When you look at the landscape, do you view one company as the most important in terms of others? I'll reference it by saying, like, to me, I always think of NVIDIA as the heartbeat of artificial intelligence in terms of being able to create the compute, creating the platform, and then investing in the teams or companies that they think will help benefit it in the future. Do you look at it in the same method? And if so, this is the important part here. Obviously, NVIDIA leads in market cap now. We saw SpaceX IPO at 2.2 trillion, 2.1 trillion, got up to 2.2 trillion. Is the company that's going to lead us in the next 10 years publicly traded currently, or has it not? It is still in the private market?
That's a great question.
That's the $100. That's the $1 billion, whatever. That's the question, right? If you look back at previous booms, oftentimes the companies that came out first weren't even the winners. Mm-hmm. So then you're thinking, okay, look, I mean, obviously NVIDIA, we know how important they are. But then you have Cerebras, and you guys have talked, I know you guys have talked about ad nauseum, building chips specifically designed for these specific tasks, and then other companies coming behind them building more design, like very specific type chip. Who's to say NVIDIA is not going to do the same, right? And they will. Jensen's a genius, and the Godfather, and I believe all those things. But just because they're ahead right now, and he knows it, just because he's ahead right now, we're talking, what's their market cap now? NVIDIA? I'm sure you guys know, like literally
4.7 and something like that.
4.8.
But we're talking about 10, 15, 20 trillion dollar companies in the next 10 years. Mm-hmm. So yes, that's a lot for us now. But if you can learn to think in exponential, it opens up the aperture that company, to your point, may not exist yet. Like ChatGPT, OpenAI, I mean, it was been around for a while, but like no one saw it until ChatGPT moment. Everyone thought Google was the answer. No way Google loses. No way. Now what? Now, Sergey had to roll his sleeves back up.
Yeah,
He had to
had
come
to
out
get
of
back
he had to lace up the Nikes, and he had to get out there, which they did, and luckily they did, or else they would be gone. Imagine Google gone. Imagine.
With all that deep mind.
I know.
Yeah, exactly. Demis, I mean, those documentaries you should watch, the Demis documentaries, incredible. So yeah, I don't know if those companies, NVIDIA, I think, very important now for all the reasons, but, Jensen will also, he'll say, to some extent, he not lucked into it, but like he was definitely right place with the GPUs. He was focused on gaming, right? And so there will be other companies like that in the future who happen to, get lucky, be right place to actually, and then right place, and then be able to capitalize on it. Next point, right? Which is what makes them great. Those companies may not all be there, and I don't think you said it's very early days. I don't think it's not all written yet. And that's why we invest in early private markets, right? Because those companies still have not been built yet, and they're still being built today in garages all around the country and around the world that we're still finding. And so that's what makes investing in the future and innovation so great. The exponential technology gets better. Things that weren't possible 3 years ago become possible. I mean, look, the crazy thing I just saw recently, Midjourney. I think I did a post on this. They were an AI image generation company, text to image, creating like basically like NFT looking kind of like art, right? Now they're doing MRI machines, imagery, human bodies. All the MRI
medical.
That's right. Midjourney Medical. All the MRI machines thought they had monopolies on this. Now it's like, wait a second, there's a new way to do something. So we're going to find out that there's new ways of doing it. A lot of different things that we thought were kind of set in stone. And that's what makes AI great, right? We're going to have a lot of breakthroughs. I think Brad Gerser talked about like some people live through their lives. If you look at all the humans that have been on Earth, it's been like hundreds of billions of people have lived on Earth since the beginning of humans or something like that. Only a very small percentage of them had a chance to see innovations. We are so lucky. We're going to see many.
Yeah.
Many.
On the private market side, if you had to pick maybe 4 or 5 key indicators that something is going to be a moonshot or a home run, what would those key indicators would be for you to invest in that startup?
Now, we'll go back to proprietary data. What is your proprietary data? What's your recursive loop that you've built? Look at your recursive loop like a product, and the output of that product is what it sells then to the market. What's the fly trap? How that works? How do you get paid to collect that proprietary data? So how do you collect it in a cost efficient way, and then create that recursive loops? I like when companies can or founders can really talk about how they build that. So that's one. Second one is talent density. Can you bring good people on your team? Because go back, AI. Rashad's like, AI is a takeover. But like at the end of the day, great humans and engineers. I mean, we're seeing now all the poaching that's going on. What's a name from DeepMind goes over to OpenAI. Oh shit, Andre Karpathy, leaves OpenAI. Now he's at Anthropic. Like what the hell? Talent, human capital. Talent density, your ability to attract good talent. And I don't know how you measure. That'd be an interesting way to think about how you measure the attraction of great talent to your company. That's extremely important now, because small teams of 20 to 30 people can build and go against companies that are hundreds of people. You have like 300, the Spartan 300.
Yeah.
Each one of them, Navy SEALs, all these small number of people going after a big number of people. That's even more true with AI because you're leveraged through with AI. And so talent density. I say another one is your ability to tell a story and your distribution of that story. So telling your vision out to the world becomes more important, not only because you obviously need, in order to get the talent, in order to do all these things, in order to get customers, telling that, but then also the distribution. So like, for example, it's like a tree in a forest. If we can't hear it, If no one's there to hear it, it doesn't make a sound. If you have a great product, but you don't have a distribution channel that's cost efficient, that's differentiated to get out into the world, you don't have a product. Like no one cares. Like because everyone can build a software product now. So now what's the moat? The moat isn't like this app. I was really good. I spent all this time to build this thing. It's how can you get this thing into the world and generating revenue or getting proprietary data or getting feedback from the market so then you can learn and iterate faster than your competitor.
Yep.
So that distribution angle is something that's like the secret again. And again, like their secret, for example, going back to the old day of technology, PayPal, I think, their distribution that allowed them to be successful early on was that they were, they hooked into the eBay marketplace. And by doing that, they're able to like power the eBay market. So they knew eBay already had the customers. They had none. If we can tap into the distribution of the eBay marketplace, we can get access to volume and for ourselves. And that's how we're able to like, they got hundreds of thousands of users in months, right? And Elon even talks about this and all those folks talk about that. And that's why eBay then, went on to, I think they bought them, right? eBay bought them. And so that's why that all happened. So building distribution is the other thing. So talent density, proprietary data, distribution, those are probably some of the biggest ones.
Okay.
Well, I want to thank you for your time. Before we leave, tell the people where to follow you, site. I know you have Discord, like the whole thing.
Man, at AtlasBerry 008 on socials. That's the best way to get me. And then, I have a community frontier network where we go deeper into a lot of these things. I have some really interesting things coming. Very, very exciting things coming that I can't wait to announce in the fall. Let's just say we're going long form. We're going long form.
Long overdue. Okay. Proud of
long
you.
Form. So that's going to be in the format's going to be very unique. We'll get you guys involved in that too. So that's where you can find me. Yeah. I'm at AtlasBerry 008. Hit me up, follow along. As my friends like to say, who follow all my content, link in bio.
Yeah, man.
Link in bio.
So much more. I wanted to talk about software. I wanted to talk about RTX Spark, but we got to do it again. All that, I know. So we'll save it. We'll save it. Yeah, we'll save it. Yeah,
I mean, that changes everything. The RTX Spark.
We got to do it again.
We'll save it.
I know. We'll do it again.
All right, then. I appreciate you guys.
I appreciate you, brother.
More to
Appreciate
come.
you.
Appreciate it.
Definitely a pleasure.
Shout out to Atlas.
Yo, he's one of them, man.
Incredible. One of the ones.
He's one of them. He is one of them.
Shout out to Atlas. All right, we went a little overtime, but appreciate everybody tapping in. Great conversation. I think we covered a lot. Do remember Revolt. Revolt is sponsoring 50% off for 100 InvestFest tickets and 10 small business that want to have vendor booths. So 10 vendor booths for small business owners and 100 tickets, VIP or general admission, first come, first serve. Go to investfest.com and enter code REVOLT at checkout, and you will get 50% off of your ticket. 100 tickets, 10 vendor booths. Thank you to Revolt. Shout out to the good fellas at Revolt. Blackout. We back 9:00 on Wednesday. We got the brother Ray Daniels.
Shout out to my brother.
And Thursday at 12:00 Eastern Standard Time for Earn Your Leisure, we have French Montana. Shout out to Montana. I'm teaching a class for EYL University tomorrow. Troy's options class is on Thursday, and Ian's stock club call is on Sunday.
Yeah, Sunday, 4 p.m. Central.
Yeah. Shout out to y'all for staying up late with us. Mary Barry, I think she said that you killed it tonight, babe. He did. He did.
Yep.
He did.
And the power of dedicating yourself to a craft, reading a lot. He dropped a lot of gems on that book list. But most important lesson, sun up to sundown.
Yeah, so that's the time. That's the time frame. What resonated as well is the idea of constantly taking in information.
Yep.
in saying to yourself, okay, I have to give this information. Like they'll remind me every now and then. I'm like, I'm going to save this for the class. And they're like, no. Give the information out. You'll find more. I found myself, all right, well, yeah, that method works too. Like I'll give this out and then I'll just go find more. So I can
get off your brain.
Yeah, I definitely know what he's talking about.
Yeah.
Shout out to him.
All right, guys. We'll see you on Wednesday.
Can we make Ray and T.I. patch it up on Blackout?
Try. We can try.
We can try.
Attempt. Tips on. I think his album's coming out too this week.
Yeah, 6/26/26.
Yep.
Tip, got you. Yeah. I got you.
Shout out to Tip. All right, y'all. Y'all be good. Love is love.
Love y'all. Arrivederci.